Good evening, Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Monday, and we're now on the, let's see, the 22nd of June, 2020, and we're about 5:55 p.m. Central Time. I'm a little later than I normally am, but I like doing these after 5 o'clock, as you know, because we get to see what the market did and how the market's starting to open. And as you can see, we've got a little bit lower in the gold and the silver, copper still staying strong, the platinum market's up, and the Bitcoin is holding into June. We're going to move to the SEP. On my charting software, I'm already doing that. In the foreign currencies, we saw the dollar weak. That supported the metal markets all day long. We saw a fairly strong day taking place also as we were watching the crude and the products. Natural gas reversed down at the end of the day, and the bonds and the notes, well, they're sort of drifting right here. When we take a look at a weekly chart of closes only, the highest recent close we have had in a long time, my friends. 1750.630 for all purposes. You're there at 1750.670 right now. As you can see in the price action here, we keep trading between that high, that low, just back and forth, and we're doing the same thing that I talked about. When you look at the swing line, though, on it, this is the chart without the swing line, you get a very different story. You can see that the market's got a pattern of higher lows and higher highs. And remember, the swing line is a study I wrote. And I wrote it so that I could easily look at any chart. I actually wrote it for my 13-year-old son at that time, so this is 20-some-odd years ago. And the idea was he'd be able to look at a chart and say, Dad, the market's in an uptrend, downtrend, or no trend. And there are 5 rules that make it up. I teach them in my charting course, but the lines get drawn, and until you take out 1730 on this pattern, the trend stays up. The market is trading over the 18-day average of closes. The bias is up. The resistance is right here where the market's running out of gas temporarily, the upper Bollinger Band. Now, it was interesting because Bloomberg carried an article today showing something like this pattern and saying the market's trying to break out to the upside. I don't disagree, but that's the Bollinger Band and they didn't show it, and that's an awful big number to overcome because 95% of the time the market will trade within the bands. There's nothing to say it can't latch onto it and like Gorilla Glue just stay with it, but I don't know if it's going to do that. What I can tell you is you have an overbought condition as measured by the slow stochastic momentum oscillator. The market hit the upper Bollinger Band today, and we can go back here. It did not hit this number on Friday. It did it today, the first time. That's where I think pros cut their positions down. Now, whether they get out of the whole thing, I don't know, but on pullbacks, until you lose the overbought condition, or in bed, where you convert the position into a very bullish situation where both the red and the blue lines go sideways over 80 for several days at a time, that can't be answered tomorrow. So I see a resistance area here. The gold silver is just drifting right now. Silver market throughout another lower high, lower low signal. Now this market's been just hanging in a very tight sideways band. This is what you call much more sideways than what gold is doing, and it's sort of just hung in here. Now what would get this bullish tomorrow is because you've already taken out tonight, and I'm talking Tuesday night, Monday's low. If the market were to take out 18, 19, it would reverse this into higher lows, higher highs, and put into play for the first time the upper Bollinger Band in a long time. That you'd have to go back to the mid-May period. In the in the copper market, we're overbought. Getting through this upper Bollinger Band and staying above it in that 269.50 area, I'm not saying it can't be done, I'm saying it's going to be very difficult. You had a lower low here, now you've got a higher high, it's just not a trend. In the platinum, we reversed out of the downside. We now have a market that's trying to keep the bias down, the swing line up, and momentum has turned the corner back to the upside. It was sort of, if we look back to Friday, sort of flat. Now it's giving its nod to the upside, so I'm looking for support between the 18-day average and the 100-day average. The problem is you got to close over the 18-day average, and the word is close over it to define that the bias is staying up. In the palladium market, we're just drifting sideways with resistance at the red 18-day average, the support at the Bollinger Band, momentum flat, and this market's like a snake coiling in a pipe. It's going to jump out of there. The question is it going to be a decline or is it going to be the jump? It hasn't told us yet. Dollar index, I thought that when the market lost the embedded reading, all we would do is go up and fight at the 18-day average, because I still think the dollar is long-term bearish. And so far, I'm going to stick with my overall thoughts. I see the swing line up, and I realize the market spent a lot of energy getting up here. The momentum of the market, if we go back to Friday, was overbought. It's working itself out of that. So no, it's not time that I see to go short, but it's certainly a time where I think those that were playing for that bounce back to the 18-day average have probably picked up their chips and they've gone to the sideline. So that's where I think they're at for the moment. You know, you hear me talk about these indicators, and our good friends with me, good friends at Modern Trader, we've put together a PDF for you on price charts, chart patterns. I mean, it's 23 pages, all in color with examples, trend lines, moving averages. They're tutorials. They help you understand what they are, how they go. They're all drawn together there. What do spreads tell you in a market? What about the Elliott, the Dow theory, price-time relationship, the Arun indicator, the Elliott wave principles, options, and so on. Money management, very important. How do you get this? It's simple. Go to our website. You'll see free offers on our website. Just give it a click. Sign up for any that you want. This is one of them right there. You can click up here. If you're watching me on YouTube, it'll take you right there. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.